Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Money 2020 in Las Vegas, Nevada. Joining me for this segment, we have Adham, founder and CEO of Frec. We're here to discuss Frec Direct Indexing and the future of index investing. Mo, it's great to have you with us. Welcome to TradeTalks.
Hi, yeah, good to
Thank you for having me. Tell us more about Frec.
Yeah, so if you look at the personal finance landscape out there, you'll notice there's a staggering difference between ultra-high net worth individuals and what they get access to and everyone else. Those ultra-high net worth individuals get products and services through their wealth managers, products that let them save a lot of money on taxes, that maximize yield on their cash, and services that let them automate some of their payments, things like paying the property tax bill is an email away. So what we're trying to do with Frec is build a modern investing platform that expands the realm of who gets access to these kinds of services. And we do that by offering sophisticated financial products, but we do it in a very simple way so everyone can use it. And so we're a startup. We just announced our Series A round.
Oh, amazing. Congratulations.
Thank you. Yeah, from Greylock, and we raised $26 million. And our product has gone out of stealth 3 weeks ago.
So let's talk about your flagship product, that's Frec Direct Indexing. How does it work, and how does this strategy compare to, let's say, investing in ETFs?
Yeah, that's a great question. So as you know, like, index investing is a massive market. There's trillions of dollars in it. And when we think of index investing, we think of ETFs and mutual funds. Well, direct indexing is the next frontier of index investing. It's just as easy, costs very similar to what an ETF would cost, but gets you these incredible tax savings on the side. And so what Frec does is, instead of buying the ETF, say for example the S&P 500 ETF SPY, Frec would buy the underlying 500 stocks in the S&P 500, rebalance them, and find tax loss harvesting opportunities. So net what that does is a customer is able to harvest 45% of their investment, and if those savings are reinvested back into the market, that would mean an additional 2% in returns on top of the S&P 500 returns.
So how does that compare to other tax loss harvesting solutions that are available?
So if you take like the first generation robo-advisors, folks like Wealthfront, for example, and Betterment, they built their algorithm on rudimentary like ETF to ETF harvesting. So they'd buy one ETF, and if that one ETF comes down, then they sell it, swap it for something else, and so on. Well, our backtesting has shown that that method of harvesting losses results in half the amount of tax losses that could be harvested using direct indexing instead. And it's offered at more than double the cost. Besides just performance, we also have built features that are just not possible with ETF to ETF harvesting. Take, for example, someone who works in tech, like at Meta, for example, and they vest stock as part of the compensation, but they want to buy the S&P 500, well, they can choose to buy the S&P 500 minus Meta. So they can exclude certain stocks to seed their index, they can contribute stocks to it instead of buying new ones, and they can borrow against an index as well on Frec at one of the lowest rates on the market at Fed plus 1%.
So as you think about competing against bigger players like Fidelity and Schwab, how do you plan on establishing trust with your customers?
So for us, trust is the #1 priority across the whole company. And we think about it alongside 3 dimensions. The first dimension is keeping the customer's assets safe and secure. The second one is being transparent with our customers. And the third one is being there for the long term. On the first point, we are FINRA regulated broker-dealers. We're SEC as well regulated advisors. And we offer SIPC insurance, right? So the same 500,000 limit that you get at any other brokerage out there, Fidelity, Vanguard, we also offer our customers. Also, we're partners with Apex Clearing, and they're been in the business for a long time. And so all of our customers' assets are custodied with Apex. So regardless of what happens to Frec, our customers' assets are with Apex. So that's really important for us to communicate to our customers. The second thing is transparency. We actually publish all of our methodology, our algorithms, our formulas, the data that we used on white papers on our website. And our product itself shows customers every single trade that happens and why it's happening. right? So that's a very core and important value for us, being transparent with our customers. And finally, we want to be there for the long term for our customers. And to do that, of course, we have to be well capitalized. So we raised a big round of funding. Also, we, as a rule, just do not make short-term oriented decisions on behalf of the customers, because we view our customers' long-term success as our success.
Right. So, well, you just mentioned you raised your Series A. What will that raise allow the company to do?
So we're obviously we just announced the product, so it's out of stealth, and for the next year we're going to be focused on go-to-market and distribution, getting the word out about direct indexing and building upon the foundation that we've put in place, just making it better, more performant, and adding more features that our customers are asking us to add.
All right, Mo, appreciate the insight. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me for Money 2020. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.